So good morning, everybody. Welcome to our small business sessions. We're doing these in collaboration with the Main Street Greenville Association. We're very excited to be offering these great opportunities. These are recorded, so folks can go back if they can't be on when we are live and get all this great information in our community. We want to thank Annette Ryan-Baker for joining us today from Greenville Federal to talk about some great small business tips for our folks, small businesses, ways to make sure that their bottom line is healthy, make sure that they are doing best practices to get things going. Now, our next month, just to get that out of the way, in December, I'm actually going to be the speaker, and I'm going to talk about upping your newsletters, flyers, and things like that with Canva. So we'll give you just a 5,000-foot view of Canva and some of the things that it can do, and get you going on that. They have some great tutorials there as well. We will be looking at some of those and getting people going with those. So Annette, I am going to turn this over to you and go for it. I will watch the chat and admit anybody else who joins us. And so thank you for being here, and we'll get going.
Okay, sounds good. Well, thanks for having me. So I am Annette Ryan-Baker. You can call me Annette Baker. The Ryan, sometimes I wonder why I did that. But anyways, I am the Senior VP of Commercial Lending with Greenville Federal. So I, as the Senior Officer, work a variety of areas. I'm in Miami County, I'm in York County. I work various offices, so I prefer that people call my cell so they know how to reach me, because you never know what office I'm going to be in. So a little bit about the session today. I wanted to really talk about the initial meeting with a banker, like what kind of questions to ask, what kind of information to bring. And then when you bring us all that information, like what's the banker do with it? And then maybe what we consider a healthy company, healthy debt service coverage, and kind of some ways you can do your own self-checking so that you're familiar with how we complete the analysis. So that being said, first thing I want to talk about is going and planning the visit to the banker. So you plan that visit to the banker, we ask that you come prepared so that we're not running you back and forth with looking for a bunch of information. So I made a little cheat list here of what information you might bring to us. So the first one is a personal financial statement. And I actually have a copy of that. I kind of wanted to show you what that looks like. So that document is simply a document. I hope you can see this on your screen. Simply a document that gives us some personal information about you, like who you are, where you live, what assets you have, and then on the opposite side of the equation, like who do you owe? And this document is pretty important because it gives us the entire picture in a nutshell of everything that you own personally. Now, a lot of people make the mistake of trying to put the corporate stuff on here, but we really like the list of any company debt to be separate. So I'll go on through that list. Second list is all that personal information, a copy of your driver's license, a couple years of personal returns. And we ask that you bring the W-2s and schedules, and you'll see that in a few minutes why we ask you to incorporate all that garbage at the back of the return. It gives us some information. 2 years of business, and then again a list of business debt, like who do you owe? What other banks do you bank with? Do you have a company credit card? Then there's a couple pieces of information, like what gives you the authority to act on behalf of the company. So we're asking for like an operating agreement or corporate resolution. And sometimes we have a single member LLC that says, I don't have any of this stuff. And in which case we'll work through that. If it's a new business, I'm not going to have a tax return, so I would need your business ID number. And then if you're going through, if we're, let's say, for example, it's November 9th, and you have 11 months almost of information to provide to me for 2022. So 21 seems like a long time ago when we're this many months into 22. And then if you have accounts receivable and accounts payable, we'll ask you to bring some information with that. And if you happen to be a brand new business, then we might want to see a business plan so we can kind of see where you're going and what you're expecting. A lot of information. Second part of the equation is what should you be prepared for us to ask? So We're going to want you to talk about yourself. Like, what is your business? When did it originate? Who are all the owners of the business? What service or product do you provide? And then in turn, who are your customers? If your customers are someone like Toyota, we might see that it takes you a little while to get payment from your customers, because that's a lot different than a restaurant or a bakery. So it provides us with just a lot of information up front. How much money do you need? And then what does your credit look like? So a lot of people they use Credit Karma. They might go out and pull the annual free credit report. And if they haven't, then it's usually a good idea for you to do that on an annual basis. So I have some information for you later for that. And then how are you going to use the money? Are you buying equipment, replacing an old piece of equipment? Because depending on what that transaction looks like, there might be some additional income that's going to flow into your income stream that we're not looking at right now. So therefore, maybe it looks like you don't qualify for that loan right now, but we need to know if this particular piece of equipment is going to, let's say, add another $50,000 in revenue. Let's talk about that so that we can look at that equation with that additional revenue stream. So I put some information in there that instead of saying, well, I'm just going to buy a piece of equipment, try telling us what that bottom line impact is going to be with that piece of equipment. Same thing on how you're going to repay the money. If we're looking at projections, then maybe bring some projections down on a piece of paper so that we can not, again, send you away and have you come back with that information later. I'm going to apologize. I've got a cold, so I may lose my voice along the way here. What are you going to use as collateral? And then the favorite question we all seem to go through as bankers right now is, were you impacted by COVID-19? And if you were impacted, what kind of time frame were you impacted? Were you closed down for several months? Or did your company have a hard time getting product? Those are all impacts that we can be prepared to analyze when we're looking at your financials. So you may have had a serious impact to the bottom line. And that doesn't mean that you're not a good borrower, but it means that we need to look at that impact and possibly make some adjustments in your income stream so that we can look at this piece of equipment you're looking to buy. But then, after the banker gets all of this information compiled, they've had an interview with you, they have all this paperwork, what are we going to do with all of this? So I just wrote down like the 5 C's of credit, and that is, we're always going to look at your company in terms of credit history, reputation, credit worthiness. As a personal owner, your personal credit report definitely impacts the likeliness of you borrowing for your business. Because if you handle your personal credit well, you're likely to handle your business credit well, and vice versa. What is your company's capital investment? Are you going to put 20% down on the piece of equipment? Have you purchased previous pieces of equipment that possibly you owe very little debt on, or have owned free and clear? And those are all things we're definitely going to take into consideration when we're looking at the overall picture. And then one of the most important pieces is your ability to repay that debt. So I put a little rule of thumb in here that, as a simple calculation, for every dollar of debt, ideally, we want your company to have $1.25 of cash flow. And we're going to get into that a lot more here in a few minutes. And of course, the bank's always going to ask about collateral, and they're always going to discuss personal guarantees. You know, for Greenville Federal, anyone who owns a 25% interest in the company or greater has to personally guarantee the debt. So that's just something to keep in mind when you're pulling all that information together. And then last but not least what are the impacts that could impact your business right now? What financial impacts that could be out of your control? You know, the things we're seeing right now with economic downturn, interest rates are increasing substantially. And then sometimes a bank, depending on your type of business, will say, well, you know, for instance, Greenville Federal does quite a bit of lending to developers and builders. We may get to the point depending on what's going on with the economy, where we're like, well, we're really not interested in a lot of builder loans or a lot of development loans right now, because we recognize that that segment of the industry is probably may get hit by this economy and the interest rates down the road. So a lot of times it may not be your company, it may just be where the bank is in its overall portfolio. So I want to pull in an exhibit for you. This is an example of an S Corp return. And I wanted to kind of give you some.
Annette, I think you have to reshare your screen when you switch.
Oh,
we still see collateral and conditions. So, yep.
That's not going to help. Okay, let me see how to do that quick. Let me try to. Sorry, guys.
That's okay.
Again. Does that work?
That it works.
Okay, thank you. So I'll have to do that when I switch back, I take it.
Probably, yeah.
Okay. So this is an S Corp return. It's a 21 return for small business. Recent purchase, they just incorporated in 18. So just taking a quick look down this, I'm not going to expect you to analyze it fully, but just the idea that the gross sales were $759,000. And we have the standard expenses that you'd expect to see on this corporate return, which is compensation of officers, salaries, interest depreciation, various others. So I just highlighted a few I wanted to just pay particular attention to. So in this tax return, you can see that this customer paid $7,700 in interest. They had $12,000 in depreciation. And then as I proceed through the return, on page 2, we find some additional depreciation of $19,975. I'm not going to require you to memorize these numbers, but we'll come back.
Thank you.
We have some highlighted numbers on an M1. And then I told you it's real important to include schedules. When we go down through this return, pages and pages back, we find that there is an amortization of $7,705. So what do we do with this? And I'm going to see if I can. Do you see a screen that shows EBITDA?
Nope, still seeing the
Okay.
financials.
Well, here we go again. Sorry about that. Okay. So what we do with that return is simply this. You'll recognize some of these numbers that we saw in the tax return. We had what we called an M1 net income. We had interest, we had depreciation, we found another depreciation, and we found that amortization that was very clear back in our return. So when it's all said and done, even though the tax return showed $145,900 in income, the banker is going to use $173,895 in income. So it came over, not taking you through 3 years of tax returns, but I kind of wanted you to see in 21, 20, and 19, this company showed the EBITDA, earnings before interest, depreciation, and amortization of $173,000, $159,000, and $83,000. Now, someone might say, well, wow, what a change. We went from 83,000 to 159. This was a new company in 19, so they only had a partial year. So really what we're seeing is some very positive numbers right here in how this company is growing, not only in sales, but in income. So when I go to my second page, I wanted to talk about debt service coverage. So we use that a lot, debt to income, debt service coverage, this banker language. So this particular company has two debts. It has an equipment loan with a balance of $119,000 with a monthly payment of $1,765. It has a credit card with a balance of $300 and a monthly payment of $10. So when I look at these monthly payments and I annualize them, so of course the monthly payment times 12, and I look at the company's EBITDA for 21, you'll see that if I take the EBITDA and I divide the debt into it, this company shows the ability to pay its debt 8.16 times. Very very positive. Ideally, we want to see a debt service coverage of 1.25 or greater. So this is an extremely pretty company. So I'm going to show you, I'm going to stop my share and open it up again. Sorry, I wish it didn't have to be this way, but we'll make it work. Okay. We have at Greenville Federal the ability to analyze your company. So we input several years of tax returns into our software, and we did what they call a narrative report. So this is simply a report that comes in and says, what does this company look like? What's its strengths and what's its weaknesses? I'm not going to take you through the whole thing, and I will provide it after the fact so people can look at it. But I wanted you to just kind of see what it does. So it comes in and it rates everything in terms of liquidity, profitability, sales, borrowing, assets. And you can see that this little company, as you've seen just a little bit ago, it can pay its debts 8 times. So it's a pretty favorable little company. And then when you actually go into the report, the body of the report gives you information for each one of those subjects. And it gives you some pretty solid information. It says that the cash flow results are strong. The company is generating solid positive cash flow from operations. And it takes you through each one of these subject lines. So just to give you a couple of just other segments into this report, it goes and it looks at various ratios. And you see this on the right, it says benchmark. So this particular company and this particular software, it analyzed over 5,000 companies similar in scope to our company. And what it did is it comes in and says, my 5,000 other companies have an average current ratio of 2.20. Your company looks like this for 19, 20, and 21. So it gives the banker a lot of information to kind of fall back on in terms of how you're looking at this particular company. So I'm just going to kind of thumb my way through here and let you just kind of see what it is. As I said, I can provide this report to you when we're done. I'm going to take you to one particular page in particular. So just summarizing everything that you saw earlier. This is it. Oh, not quite. Down, down, down. Okay. So it comes back here and it produces what it calls an industry scorecard. And it's looking at your company in this current period, this year that we annualized. And I cannot get that out. Analyzed today. It gives us the industry range. And then it tells you how far this company is from the industry range. Again, there's 5,000 other companies that this company has targeted it. So you can see that this is very strong. It says that we are 766% greater than those other industries that this company looked at. So just give you that range. And then we're through the report. I'm going to move this out of our way. Sorry. All right, bear with me. Bring another one in for you.
I find that all very interesting. I've never seen a lot of those numbers like that before. So it's really helpful to know what you're looking for. I'm sure Greg feels the same way as we look at businesses in the county and helping people get started to know those things. So.
Okay, so we have a second company I kind of wanted to go through just to kind of give you the opposite impact that the banker sometimes has to deal with. So this is a small manufacturing company. It files its return on Schedule C. So very simple, flows right into the personal return. So as we look through this, we're going to have like a one-page tax return. So we're showing the gross sales, cost of goods sold, showing a gross profit, gross income, and then we have the same expenses, only in a different format. So the particular expenses that the banker is going to look at again is our depreciation and a couple of items of interest that we have over here in 16A and 16B. Then we see that our bottom line for this particular company was actually a loss of $9,732. So that being said, can you see my screen now?
Mm-hmm.
Oh, I'm sorry, Peggy. I probably should have.
No, you're fine.
You gave me a hard time with that. Okay.
It's the limits of the technology still. So.
Yeah, well, and it's the limits of the person who's at the helm right now. So let me share here in a minute. Okay. Okay.
There you go.
Okay, so little simple calculation on this one because it was a Schedule C. So you see over on the right-hand side, I brought forth some information. I'm showing you that this company had a loss of $9,732. And then we saw in that return again that we had depreciation, we had interest, and we had second item interest. So when it was all said and done, this company actually, although it reported a loss, it had made income of $44,768. So in the banker's view, the company made money. Now I pulled in 3 years because I kind of want to give you a history of what we had going on here. So looking at the history on the company, we have 3 years of returns summarized to the left-hand side. So you can see that we come down here and you see our EBITDA that I calculated from the right side coming in here for 21. In 20, our EBITDA was $93,841. And then in 19, we were $36,172. So when you're looking at this page, you're not really concerned because the company is making money at first glance. But when we actually look at the company from a different perspective, this was found during a loan review. So every year we reach out to our borrowers and say, please send us your tax returns, tell us what your debt is today. And then we go in and we do an annual loan review. This particular loan review, we already knew about the GF mortgage, of course, we have it. We knew about the credit card debt. But they had purchased 2 recent pieces of equipment, which added some substantial payments. We have $1,079 on one of those pieces of equipment, and we have almost $1,600 on the other. So when it's all said and done, and you look at the annual payments on this company, it's $55,428. Well, our EBITDA was $44,768. So unfortunately, the company does not show ability to service the debt. So the debt service coverage that we want at 1.25 is actually coming in at 0.81. So while this is not a delinquency problem in any manner for our bank, they've paid on time. It's just maybe a matter of time of how long, if the profits continue to be low, how long can the company continue to service the debt? So, it's a company, we have ongoing relationship. We speak a lot. They keep us abreast of what's going on. They were impacted by COVID. They've been impacted by the inability to keep employees, which a lot of us have been impacted by. So it's, in terms of our relationship with this borrower, it's still solid. However, because of the regulators and the requirements to do an annual review, we just have to show that we are on top of this credit and that we're having dialogue with this particular borrower. And that does continue to happen. So last but not least, I brought in the information for the annual credit report that any borrower, any person can get free every year. So then I also brought in some credit scores and they may differ a little bit, between banks, but I think we're all pretty much the same. That credit score of 580 to 669 is considered fair, 670 to 739 good, 740, 799 very good, and 800 plus excellent. And we don't run into a lot of 800 plus. I mean, they can be difficult to find. So I thought I'd at least share that, because if you're going out and you're pulling that credit report, you need to know what the banker thinks is acceptable. And sometimes we have those conversations with a customer who says, I'm trying to improve my credit report. How do I do that? And so we have retail loan originators that work with those consumers to try to help them get their credit scores where they need to be so they're a healthy borrower. And sometimes your self-employed people, their credit report gets hit because they have, various banks pulling their credit. And so sometimes we can't exactly go by this credit score range because we have to look at the picture. What's the credit report look like? Do they have a solid credit history? And sometimes the credit score, I don't want to say isn't fair, but it isn't indicative of exactly how they paid their debt. So sometimes you have to take a different view. And that's pretty much all I have today. And I would welcome the opportunity. I did not pull in the last narrative report for that last small business because I recognize we're having problems with transferring information back and forth, but I did run a narrative on that business. And if you as business owners ever want me to run a narrative on your business, I can do that. I don't have to pull credit. We can talk about what the report looks like. I would welcome that opportunity if you ever feel that need. And that's all I got today.
You mentioned improving your credit score. What are some things that small businesses can do to improve their credit scores?
Yeah, well, actually, it would be the guarantor or the owner of the small business, but a lot of it is keeping that credit card debt at a minimum. And it's also being protective of your credit score. My husband gets so funny when we go to like a department store like Macy's, and they're like, can I get you a Macy's card? You get 20% off today if you apply for this Macy's card. I don't want anybody touching my credit. I'm real particular about that. So it's just making sure that you have as few people pulling your report as you can. Some people don't recognize when they're out going from auto dealer to auto dealer, and those salespeople will talk you into pre-qualifying that every time you step into another dealership and you allow that to happen, that's a credit pull, and it definitely impacts your overall credit score. So it's really of course, it's paying everything on a timely basis, but keeping that credit card debt to a minimum is very helpful for sure.
All right. Let's see. Anything else? Greg, did you have any questions for Annette?
No, I think I'm good. Sorry, I had to step out there for a second.
That's okay.
But no, that's great information. Yeah, and we'll certainly pass that along to the businesses, and
Right.
Those are great tools and good information to have for businesses to get them going. Yeah, hopefully that answers a lot of questions. They're prepared for when they come to see you. Yeah.
And that also, with inflation and everything that's on the horizon, any suggestions on how to inflation-proof yourself a little bit if you're a small business? I know, right? I'm asking the impossible.
So hard. I mean, we're having a lot of conversations, that's for sure. I think people did a really good job of refinancing their debts during the low interest rate environment. So, we've definitely seen a slowdown in the loan volume right now. I think people are just on the fence. Maybe we had a couple of people who had some expansion plans, but they decided, given the rate, they're going to pull back on that for a while. It's understandable, right? I hate that. I hate the impact to the overall economy all over, but it's just, we don't know what we're going to be up against moving forward. None of us have that crystal ball. So definitely maintaining those debt levels is important, but it might be tough for a while.
All right. Well, if nobody else has any questions, thank you, Annette, so much. So full of good information here, and lot to think about and I hope folks will take advantage of this really helpful presentation. So,
Well, thank you. I'll get some information out to you, Peggy, that you can share. And if they have any questions, they know where to get me.
all right. Well, thank you guys so much. Thanks everybody for being on today. We'll get this up on our YouTube channel soon, and everybody have a great day.
Thank you.